I'm the Chuck in the Markets Up, Chuck. Today's blog was titled False Evidence Appearing Real, which is an acronym for fear. And, I like that acronym because I really think fear in the investing process is really a very dangerous situation because, in the reality in the long run, we need to be optimists because, as the old saying goes, Wall Street climbs a wall of worry, simply means that, our economies persevere and they're strong. And as I say at the end of today's blog, our economy and the economies of the world right now are more productive than they've ever been. And that really speaks to a very bright long-term future, in my opinion. But that doesn't mean you're not going to have recessions and pitfalls along the way. And certainly the one we just went through is very bad. But what's already beginning to happen, when we were in the throes of the recession, we were looking at companies and we were seeing some impact on earnings. And, many good companies were looking like, they were going into oblivion. And I showed this last week, and I'm going to show it again just because I think it's so important. If you look at United Technologies, for example, and this is Sikorsky Helicopters, and Otis Elevator, and Carrier Air Conditioning, and Pratt & Whitney Engines, kind of a industrial company. The bottom line is they had an interruption in earnings. I want you to notice that their stock price fell precipitously. Otherwise, look how closely their stock price followed their earnings growth for all these years. This is a 17-year chart here. And then we had the stock price react, and now we've got this recovery. But what's interesting is the stock price went down significantly more than the earnings did, and it overshot the earnings, so to speak. And now we're starting to see forecasts for earnings improvement, and I think that's the real point of the blog. We've gone through the recession. Now we're starting to see many companies have earnings improvement. But given that, I would still say this is a $68 or $70 stock that trade in its normal price earnings ratio of around 17. It's only trading at 13 times earnings. We have a very nice dividend yield here. So even though we've had this recovery, I don't believe it's over yet for select companies. There are companies, by the way, that have gone up too much, but I don't think this is one of them. My second example would be Charles Schwab and Company. I want you to notice how closely stock price tracked earnings. The black line is stock price, the green line is earnings. Here was the irrational exuberant period where the market was completely mispricing the stock. And I like this picture because it does show that, markets do misprice stocks. Of course, Schwab was getting a bunch of, really excellent earnings going on in this period of time. This had to do with the dot-com phase and all the underwritings and all the, the market was so hot that everybody was buying stocks. And then they had a correction in price there, and I want you to notice that. But then look how strongly their stock prices recovered after that and after the last recession we were in, which was calendar year 2001, just to put that into perspective. That was this period right here. Now we've had another recession, but already earnings forecasts are beginning to, go back north again, and you can see the stock price fell precipitously more than it should have. It's maybe a $19, $20 stock today. It's rallied back up to 18, but we're starting to see the earnings forecast increase. And again, we got a nice little dividend yield here. So here's another example of a company that is, looking to see, strong improvements going forward. And I do want to make a distinction, and I showed this picture last week. Here's General Electric, and you see that you've got a strong correlation in earnings and market price also. Just like Schwab, it had a significant overvaluation period caused by irrational exuberance. But the difference between Schwab and United Technologies and General Electric is General Electric had a much more severe drop in stock price. So this price was a much more rational decline. Even though they've had a rally, it certainly hasn't been as good as the other two. And forecasts are actually possibly still down, going into the next year or so. So, although I do believe General Electric may improve someday, it's not showing that it's going to improve as of yet. And my final example today will be Staples, which is a retailer. Again, you saw an irrational, exuberant price. But look how the prices always tracked earnings. We did have, as a retailer, as most retailers, we're facing some pretty strong headwinds and had some earnings drops. But I also want to point out these companies' earnings are not collapsing. They're dropping, but they're not collapsing into oblivion. They're not bleeding red ink, and they're not going out of business. And now, we're looking at the forecast for Staples' earnings to begin to increase again. And the stock price, of course, is coming back. It's only a smidge away from its normal PE ratio, currently, which would put it at around 22.5 or 3, and that's about where it's trading at. However, if you look out further into next year and we get the earnings increase that the analysts are estimating, you've got a $25 to $30 stock, and that's a nice gain from here. So the reality of it is, stock prices overextended on the downside. The recession was bad. Things are beginning to improve. Stock prices are rallying, and they have rallied strongly, but they're still not back in most cases to the normal valuations they had prior to the recession, and it looks like earnings are going to improve. As I always point out, do your homework. I believe there's a lot of opportunities left in this market for the long-term investor. It doesn't mean there won't be a correction, but a correction would just be a stronger reason to be buying more stock. It wouldn't be a reason to get out of stocks, and it certainly wouldn't be a reason to avoid it. It's Chuck Harmel saying thanks for listening. Talk to you again tomorrow.